Good morning traders, Mark Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is Friday the 7th of July. Can only mean one thing with it being the first Friday of the month. You guessed it, non-farm payrolls. And yeah, I mean, will there ever be some decent data out of the US, I ask myself. Well, it's supposed to be today. Previous was a fairly dreadful 138,000 expected. Today to be a strong result, 175,000 predicted, with a lot of focus on the average hourly earnings, with inflation being a big problem for the Fed. Did the workers of the United States get a pay rise, or did they not? So keep an eye on that. It is expected to be up from 0.2 to 0.3. That's probably going to be where the vast majority of the focus is. So if you do get a beat on expectation, then all the better if you get that confirmation with the average hourly earnings being positive as well. Obviously, if it's bad, you want to look anywhere from sort of 35 to 45,000. Give or take either side for it to be. Obviously, if it's a dreadful number, somewhere in and around sort of 130, 135, something like that would be obviously terrible. And if there was no increase in average hourly earnings, or indeed a decrease, then clearly the dollar's going to get spanked yet again. There'll be no turn in sight off the back of that. So what you want to do when you're considering trading non-farm payrolls is you want to have a look at what represents decent value. That's what you want to have a look at. So what I mean by that is if the anticipation, whenever there's a forecast that's positive, then I'm looking for a shock number that's well beyond that to the positive side. You know, as I say, plus or minus sort of 40,000 odd. But oftentimes I prefer to look at the shock to the opposite end of what's expected. So 175,000, I'd want it to be negative of 40 odd, 50 odd thousand jobs, because what that does is it wrong foots all the analysts, all those expectations, all that sentiment pre-release that's out there. It wrong foots it. Excuse me. So therefore you get a bigger impact. So you're going to get a lot more weakness in the dollar. So what I would do going into that idea is look for, as I say, good value in a currency. So for instance, in the Aussie dollar, if the data is really bad, then obviously the potential for upside is huge, versus if the dollar's been strengthening against a currency prior to the actual announcement, right? So this is the Aussie dollar, so it goes down. The dollar is strengthening against the Australian dollar. Then is the profit to the downside after we've been in this continuation for a long period? You know, there's no real value there, right? The value is to the upside, and as I say, you gain that information from understanding what that pre-release sentiment is prior to the actual announcement, the announcement itself, and then you can go into it with your eyes wide open. And then if the data disappoints to the extent that you are plugged in to it from that regard, then obviously happy days. You know you've got yourself a decent trade. So I just want to focus your attention on this area because it's kind of interesting from an order flow perspective. Got a level of support. Price comes into that level again. Now just imagine, if you will, just bear with me, none of this had occurred, right? Just discount all of this price, wasn't there yet, and just focus all your attention on price action at the hard rate edge and what you would have been able to see in that moment in real time. That is all you would have known. So you have this level where price is pinging off it basically perfectly, and it's followed up with an engulfing candle, right? You see that? So you've had several candles down into a prior level of support. Engulfing candle starts to react as if it looks as if it's going to work, and that's what gets a trader in off the sidelines to come in and take some risk to buy that currency, right? So just ask yourself the same question. If you were taking a trade, if you were looking to buy and sell off a level, what is it that gets you involved? Well, that might not have been it, but an engulfing candle generally does get the level trader to pull the trigger. But obviously, you know, there is variations on that. Everyone's got different ideas about how to enter a trade. It may be one candle like that. It may be 2 or 3 candles. It may be a doji candle, a hammer, you name it. It might be a big engulfing candle. The point is that usually 2 or 3 candles will encapsulate everybody who's going to enter a trade to come in off the sidelines. So with this just being one candle, obviously not everybody would have traded this level, but the fact that it was an engulfing candle, it's a fairly decent one. It didn't close above the high of the prior candle or at its highs, but it was decent. Would have meant people would have been enticed into pulling the trigger and going long. And of course, if you position yourself as that individual, if you place yourself in their shoes, then obviously, you know, where you've got to think about what you would do in terms of stop loss placement, profit target. Stop loss in particular is important for what we're talking about here, but it wouldn't be ridiculous to have a profit target into the underside of a 200 period moving average for a little cheeky trades, and importantly below the level somewhere under here is where you'd place your stops. Now just think about that. If something big, let's just call it something big, an institution or something like that wants to do some buying, a hedge fund wants to be a buyer of this currency, then it's going to work a level. And what I mean by work a level is it's going to induce people into a position, and then price is going to go against those traders, and that's going to allow the hedge fund, as an example, to pick up those orders. Now if you're a buyer at a level, so you're a buyer in here, right? Your stop loss is below there. What's the stop loss order that is sitting there? If you're a buyer, you believe that's going up. What's your stop loss? Well, your stop, SL, stop loss, equals sell orders, right? Those are sell orders sitting there. Now, if you're going to do some big buying, what do you need a lot of on the other side? You need a lot of selling. So as price comes down through that level, it's going to trigger, and obviously it comes down quite considerably, it's going to trigger those orders and allow something big to buy in the face of that sell-off. Right? That's what a hedge fund will do. It will buy in the face of selling. Now this wasn't per se, this first part of the process of this order flow, it has nothing to do with really anybody being happy about selling. These people were forced to sell because the stop losses got triggered as price came down through the level. But the fact that it then broke out fairly convincingly with a big engulfing candle of its own, so if we just look at that, this area here, this candle, like that negative candle, that candle, and certainly this one, as it breaks the low of that prior candle, is going to seduce and induce a different type of trader into the game. So whereas those traders were forced to sell, imagine as it breaks the low of that engulfing candle, you're going to start to get breakout traders go short. Now what have I just been saying about a hedge fund will do buying in the face of what? Selling. So this is a different type of selling. This is selling, this is free will selling. This is they wanted to take those trades, those momentum stroke breakout traders. Now of course, as I said, what will the hedge fund do? It will buy in the face of selling. Okay, so you're still with me? Hopefully you're following along. This is what I essentially call a complex stop hunt. Accumulation of in an area, all starting off with that stop hunt. Now price breaks down through the level, starts to pull back. What type of trader, just ask yourself, what type of trader would be interested in that type of pattern where price breaks a prior level and then pulls back into that level area? What type of trader becomes interested in that pattern? You guessed it, a retracement trader. And look, now for all it ends up as a bit of a doji, right, it ultimately in real time would have looked negative. So let me just clear that up. The candle, when it was live, acted as an optical illusion. See that wick? That was negative. Now, if you're a break pullback trader, right? That's heaven. It's happening right where it should be happening. So that induced who into the game? It induced sellers into the game, more sellers into the game, free will sellers, retracement sellers, right? Well, who can buy in the face of that selling? You guessed it. And this process goes on, and I can walk you through all this, but it's a bit beyond the scope of this session because we're running a bit low on time. It's 10 minutes already, but you get the idea. So what is happening essentially, by the look of it, it could obviously change. Order flow can be totally messed up by news events, so you've got to be careful about that. But what ultimately seems to be occurring is, if we come over to this area here again, we've got those free will sellers coming in, or they came in and they've been spanked. So breakout of that prior level, there was a minor one in there as well, pulls back, sells off, breaks the low of that prior low in here, so that would have maybe seduced the odd breakout trader in here, but mainly you would imagine the vast majority of selling came in there with the retracement sellers. Now where would they place their stops? Above this level. That's going to help draw price up. That's demand, and this selling allowed, again, what, just following through that logic, allowed something big to do some buying in the face of that selling. Right, it's a very trappy type of candle, that as well. Came back at the level, had another look, and then boom, nailed them again with an engulfing candle at the level. So this seems like it offers decent value, this particular trade. There's plenty of juice to the upside, and if those numbers do disappoint, like I've explained, then you know, this looks like a pretty decent trade. And just walking through the logic of what I've just discussed, obviously, you know, I haven't gone into detail every single little element of it, but you get the idea. There's something doing some buying down here. Now again, as a caveat it with saying, don't, you know, dislike the video later on if the Aussie dollar sinks like a stone, because that's out of my control. It's not. It's just a function of the news can change this order flow equation that's going on. It can totally change it. It just depends on the data. So don't think of it in those terms. But if it does, as I say, you will be buying knowing that something's been working this level and doing a great deal of buying. So just bear that in mind. And if you want to come and learn how to analyze charts like this and profit from this type of understanding the financial markets, then click on the link below. Do it now. Come and join my brand new inner circle. You'll be glad you did.